Hello students, I will practice how to impair an asset to be disposed. As we discussed in class, impairment occurs whenever the carrying or the book value of an asset is not recoverable. And we have two cases to impair the Ppne. The Ppne still to use or Ppne to dispose. So this case is covering the Ppne to be disposed. So we will reclassify this Ppne to the other asset. Okay. The undiscounted future cash flows of a Ppne $20,000 and Ppne acquisition cost of $50,000, accumulated depreciation $20,000, fair market value of an asset $10,000, and selling cost $1,000. The asset is going to be disposed after the impairment loss. And since the impairment, the fair market value of an asset has been restored to $40,000. Oh, okay. We also have the restoration case after reclassified by to the other asset. So you should remember we have two steps to determine the loss on impairment of Ppne. Step one, is impairment test. If the book value, the net Ppne or carrying value of this Ppne is greater than the undiscounted future cash flows, then the next step to impair. This undiscounted future cash flows is the sum of the future cash flows not discounted by the interest rate or weighted average cost of capital. Any kind of asset, the reason why the company has an asset on hand is to produce something or to make some probable future benefit. So we calculate these future cash flows generated by this asset and discount. But in this case, for the impairment test, we do not discount these future cash flows, unlike the corporate finance. So we just sum up these future cash flows generated by this asset and sum up. If this undiscounted future cash flows is lower than the carrying value, the book value, or net Ppne, then it has some the probable issue of this impairment. So based on that information, the Ppne acquisition cost is $50,000 and accumulated depreciation $20,000. So the net Ppne is just difference between two. So $30,000, and then we also have the undiscounted the future cash flows to $20,000. So by comparing these two, the net Ppne or book value or carrying value is greater than the undiscounted future cash flow. So we should go to the next step to impair. So step 2, determine the impairment loss amount if the book value is greater than net realizable value. Now, we don't need any information once we pass this impairment test to determine the impaired. Undiscounted future cash flow is now useless. It's just forgone. So we are not going to use this information any longer. Now let's compare this net Ppne with net realizable value, which is the fair market value minus cost to sell. So let's put this $30,000 again. And how do you get the net realizable value? Again, the fair value minus cost to sell. So $10,000 is the fair value. This is tradable at the market. The fair market value minus, if there is some cost to sell, $1,000 in the question here. So the $9,000 we realized net realizable value. So it's so small. So $30,000 net Ppne on the book is greater than this net realized value. So the differences are the loss amount the company should recognize. Then let's create a journal entry and paste that journal entry into the balance sheet and income statement. Impairment. How to impair? Now on the debit side, loss on impairment of Ppne. How much is that? $21,000 impairment. Then we pair this loss on impairment of Ppne with accumulated depreciation. We do not reduce this Ppne right away, even though we recognize this loss. Why? This Ppne is very important information for the investors to identify what is the original cost the company has purchased. That is really important information. Never change. Original cost, the principle in accounting. Okay, so instead we reduce this Ppne right away. We increase, right, accumulated depreciation. Accumulate the same effect, depreciation. We increase accumulated depreciation by 21,000, so that we will increase here. Minus 21,000. So we increase the $41,000. Do you see net realizable value now 9,000? The net Ppne exactly the same as net realizable value by recognizing this accumulated depreciation more, not touching this Ppne original cost. And then the loss amount negative $21,000 on the income statement. Okay, then it should be go to the retained earning, and then I'm going to put this to number, and let's make sure if the balance out when we record this journal entry of impairment. So exactly correct. And then we also determine that this asset that will be the disposed, so is no longer in the Ppne. The Ppne, the fixed asset, the reason why we put this the fixed asset in the Ppne account is to use it or use it to produce something or to make some probable future benefit. But if this asset is useless and then is about to sell off, then we put this fixed asset on the other asset category, so that is never be the depreciated from then on. Okay, so other asset is not gonna be depreciated because it's about to sell. Reclassification to other asset, if not used any longer, then we should increase other assets. How much do we put other asset here? 9,000. By this 9,000, we should increase 9,000. Then now we need to remove this Ppne. It's no longer here because we are not going to use it to produce something proper future benefit. So we should remove the Ppne on the debit and the credit side of the asset. So $50,000, exactly same. $50,000, right? So we put $50,000, and then also we should remove the accumulated depreciation, that contra account of an asset. So in order to reduce this $41,000 accumulated depreciation, it should be recorded on the debit side. Why? Because that is the contra account. So here, by putting this accumulate depreciation on the debit side, how much? By 41,000. So that, let's put this here minus 50,000 Ppne. So we don't have any longer on the Ppne. Also, Let's get rid of this by putting positive $41,000. That is the opposite effect of the control account that reduce. So we don't have anything, but we should now transfer this the $9,000 of the Ppne, net Ppne, to the other asset, so that is not gonna be depreciated. Okay, so we have the same effect. We don't have any Ppne, but we increase other assets, so the balanced out. We don't have any effect on the income statement. That's why it doesn't change anything here. Now, restoration of the Ppne value $40,000. Ooh, now let's put 31,000 there. 31 to meet this $40,000. $31,000. Let's increase other assets. 31,000. No, it cannot be increased to the $40,000. The condition of the restoration or revaluation of the Ppne reclassified into the other asset is just up to the original the book value before impairment. How much was that? The book value was, right, book value was $30,000. Here you go. Before the impairment, it was $30,000. So we should increase only $21,000, and we recognize the loss in the same way, but the opposite impact gain $21,000. By doing so, we increased this other asset 21,000 and the gain 21,000. That effect into the retained earning in the positive value 21,000. So we increase the total asset by 30,000 and to the 30,000, and total liability and equity $30,000 and matched out. Okay, that is the case of restoration of the Ppne value $40,000 to be disposed. But if this case is not the disposure, is not the disposure case, but if the company still to use this Ppne, restoration or recovery on impairment loss not permitted by GAAP. Okay, so you should remember. There's no restoration if the Ppne is still to use. Okay, that means that there's no other asset part here. Okay, see you in the next video clip. Bye bye.